Have you fallen into one of the big four traps of budgeting? Hi, Dave Wilkins, Wolverine Business Solutions, your partner in building lasting value and achieving your business and related personal goals. Can you believe we are already in November? Just 2 months left to go in 2022. One of the key activities you should be thinking about getting started now is preparing your annual budget for 2023. Now, I know most people hate preparing budgets, and many business owners just don't do it. But if they're done right, budgets can be a great help in growing your business. The problem is that most budgets aren't prepared the right way. Today, I'd like to talk about 4 of the biggest mistakes I see most business owners make in preparing their budgets. What are the big 4 mistakes? First, not ensuring the budget is aligned with your strategic plan. Number 2, income statement budgeting instead of cash flow budgeting. 3, trendline budgeting based on prior history. And 4, ignoring key business drivers. One problem I see is that budgets are often prepared independent of the business's strategic goals and objectives, which hopefully are defined in a strategic or business plan. One of the questions I often ask is, how does your budget support achieving your business goals and objectives, both short and long term? The answer I often get is, gee, we never thought about that. Failure to align your annual budget with your strategic goals and objectives often leads to unintended consequences that can drive the business off course and miss meeting or achieving your goals. The second big mistake is that most budgets focus strictly on the income statement or the P&L, just budgeting revenues, cost of goods sold, and expenses to come up with a projected profit. The problem is that income statement budgeting fails to include a number of non-income statement sources and uses of cash, such as principal payments on loans, payments for equipment, owner distributions, or dividends. This often ends up with the business owner saying, I beat our budget, but I've got no cash in the bank. Cash flow budgeting factors in revenues, expenses, and other sources and uses of cash, which results in a much more complete and useful budget. The third big mistake is simply basing the budget on prior year activities and maybe adjusting for trends or adjusting last year's actuals for percentage growth or decline. A much better approach is called zero-based budgeting, which means treating every year independent of the prior years. Zero-based budgeting involves developing budget estimates by taking a fresh look at what you think revenues will be for the upcoming year, not just using this year's and the prior year's results. All expenses need to be justified and not just based on this year's and prior years, as that can bake in unnecessary spending or wasted spending that happened in these prior years. The last big mistake is just budgeting the financial results. How many dollars of revenue, how many dollars of expenses? A much better way to preparing your budget is to start with an understanding of your business drivers, particularly on the revenue side, such as the number of customers, the sales per customer. Then estimating the size of each driver on a monthly basis and computing the resulting revenues from that. Using business drivers provides a much more accurate means for validating the revenue numbers and can easily incorporate variations based on seasonal activity, customer attrition, and growth, or other economic events. Budgeting expenses is then tied to these business drivers. Making these changes in preparing your annual budget will result in a much more realistic budget that really will help you achieve next year's goals and objectives. Are you ready to prepare a value-add budget? To learn more about how Wolverine Business Solutions partners with our clients to build business value through better budgeting, please reach out to us using the links below. If you have any ideas for other content or questions on how to improve financial performance, accelerate growth, and build lasting value, please let us know in a message below as well. And be sure to join our Facebook group and our YouTube channel using the links below. Thanks.